Folks, I kid you not. This is the stock market that will take absolutely any bit of good news and say, that's it. All that is bad is over. We are going back to the moon. Now, this is, of course, a good thing if you own stocks. It's not the greatest thing if you are wanting to buy stocks or you are wanting cheaper prices. This is why, folks, we have been saying pretty consistently, with the exception of a few times, I would say about 80% of the time, I say never squander a red opportunity. And the reason for that is since March of 2020, the general rule of thumb has been buying the dip. It seems to work. And the reason it works is because this market looks for any bit of potential news to rally. Today, we got the big Merck U-turn. So, this morning, I kind of got ambushed by that news because when I started my live stream, I didn't even know about that news yet. So here's the thing. This COVID treatment is actually a pretty big deal so far, at least in terms of what we can see. Reducing hospitalizations by 50%, potentially completely eliminating deaths on the basis of a study of about 700 people, 14 hospitalizations, half the control group, and no deaths. It's pretty incredible. The question is how similar is this Merck treatment, a pill that you would take after you contract COVID? How similar is this to something like a remdesivir, right? A remdesivir is an antibody. Remember the monoclonal antibody cocktail that Donald Trump got? Even though most people didn't have access to it, of course, Donald Trump got injected with multiple different monoclonal antibody cocktails, which helped him go from a pretty dire state to fine. And, parading around outside Walter Reed with the Secret Service, which we covered all this live, right? So, the stock market is loving this pill. Like this pill, in my opinion, is more than a pill for COVID. It is, it's an anxiety relief pill. It is an antidepressant. It is a, please take this red pill and let stocks go to the moon for once. And that's essentially what's happening today. And again, the reason this is happening is because we are removing anxiety from the marketplace. And anytime we remove anxiety from the marketplace, first thing that happens is people take their cash and plow it into the market. Volatility index down almost 10%. Dow Jones Industrial up 1.61%. The S&P is up 1.25%. The NASDAQ is up 0.85%. And it is all because of the little red pill. And we are even seeing a part rotation in the market, which is interesting to pay attention to. A rotation, a specific rotation that we used to only see back in 2020. That rotation has heavily been broken apart in 2021, where we haven't really seen cohesiveness amongst recovery stocks versus other stocks. But today, we actually do see a cohesiveness amongst recovery stocks. Dave & Buster's up 9.12%. You've got United Airlines up 7.4%. Toast, the payment processor for restaurants, up 6.71%. Dutch Bros 6.63%. Delta up 6.55%. Southwest 5.9%. Marriott 5.75%. American Airlines, Norwegian Cruise Lines, Cheesecake. You get the idea here yet? Let's keep going, just in case you don't. Uber 5%, Disney 4.27%, Carnival, American Express, Gap, MGM, Cinemark. Do you see where I'm going yet? All of these stocks are well over 3% today. Booking Holdings, does it ring a bell yet? Airbnb, Wynn, Simon Property Group, one of the largest mall operators in the world. Anything yet? Its recovery stocks are rallying on this news because it's not just about the COVID Delta variant and cases that we have now. It's about extinguishing fear. This pill is kind of like taking a plane, like a Boeing 737 that puts out fires, and it's loaded with foam or that red powder or whatever they drop into fire areas. And they're putting this down as like a preventative fire retardant. That's what this red pill is. Why? Because you still have recovery stocks freaking out over the potential that Delta is going to absolutely destroy Christmas. And nobody wants Christmas to be destroyed. First of all, people don't want to die. Okay. Second of all, people who don't want the vaccine are like, wait a minute, you's telling me if I get COVID, then I can take something that's going to prevent me from dying? Hell yeah, sign me up. I don't need to get the vaccine anymore. That's, in my opinion, literally what this pill will do for the anti-vax crowd. Which good, at least they have an option, right? But it will also help the broader market go, wait a minute, this right here is going to be the solution for making sure Delta is not Santa Claus this year. Or the Grinch, I should say. That's better. The Grinch, okay? We don't want a Grinch this year. This is actually very good news. Obviously, we need FDA approval for this thing. Things in phase 3 trials. I would imagine FDA approvals would be expedited, and there'll probably be many cases of compassionate use as well, which compassionate use is essentially the opportunity to provide folks medication when they are essentially very likely to die from COVID, and they can take something that's not technically approved yet because they would probably die otherwise. So this is good. The other thing, and you can't, how do I want to say this? You can't overstate how important this is. The pill is only necessary for people who actually got sick. That's even better. You don't have to vaccinate everyone. You don't have to give the red pill to everyone. Red pill's not a vaccine. You don't have to give it to everyone. It's just, hey, whoever gets sick, we got a little red pill for you. So, in case you're wondering why the 10-year treasuries are falling, yields are falling, in case you're wondering why recovery stocks are going up, and what's crazy is you've even got some other things going up here as well, like crypto. Crypto is loving this news, absolutely loving this news. So you got the miners going up. You even got Upwork up, which is totally a stay-at-home stock. What this pill is doing is more than just pumping up recovery stocks. It is saying to the market, folks, fear not, we are going to get through this. We're in 2021, and we can defeat the challenges we face. Evergrande is not going to be a big deal. That's what the market's starting to think right now, okay? Now, I'm not making that guarantee. I think Evergrande is something we absolutely have to pay attention to. But I have said in many, many videos on this channel, I don't think that Evergrande is going to be a big deal. I think the fear of Evergrande is going to be more bad. And the fear of Evergrande has led to this crypto disaster that we've seen. And I suppose by crypto disaster, you know, when you zoom out, it's not that big of a deal, but we know that's how crypto works. But anyway, we went from, you know, this beautiful rally of like 53,000 to essentially down to almost to our support line here at just under $42,000. And broad-based sell-off in cryptocurrencies. I actually sold my crypto just to rebuy it lower because I'm like, yo, this Evergrande stuff's gonna be a disaster. Duh. It kind of was. The fear of it was. But that was the point. This is why as soon as the fear of that hit an inflection point where it's like, okay, this fear is going away, the last 3 days, not today, I've been buying the dip like crazy. And I've been buying the dip like crazy because I realized that fear is mostly overblown. That our fears might be level 100 when reality is like level 10 bad. That's usually how it is. Now, even, folks, that was even true in the Great Recession. In the Great Recession, fear was so mega freaking high. People are like, this was one of the first places I learned what not to do. Is like at the bottom of the market, my dad's like, oh shit, my 401k's gone to hell. That's it. Sell everything. It's like, Dad, you just paper-handed your retirement. Oh, man. Anyway, so look, sometimes you look at what not to do, right? But anyway, this is a beautiful, beautiful thing for markets. It's a beautiful thing for people. It's a beautiful thing for humanity. It restores a lot of faith in medicine that I think all of us should have, because I think a lot of faith has been lost. What do they call it, the Fauci jab? People don't want to get the Fauci vaccine or whatever. There's been so much. It's so nice that now it's like, hey, okay, you guys fight about the vax. In the meantime, let's prevent people from dying over here with this pill. It's wonderful. Now, I still encourage vaccinations, but I also believe in individuals' right to choose. Hey, look, this pill is such a wonderful, wonderful, as long as it ends up getting approved, wonderful, wonderful backup choice. I love it. I really love it. And I believe that this moment today, continuing over the next 2 weeks, let me rephrase that. Continuing over the next 2 weeks, we still have uncertainties left in the market, okay? Let's make this extremely crystal effing clear. Okay, you still have a debt ceiling crisis coming up on October 18th. Now, between you and me, it's a bunch of bull crap. Like, the U.S. government ain't gonna default. I think the odds of that are 1%. Okay, I think it's not going to happen. So don't worry about it. In my opinion, okay, my opinion, it's not a big freaking deal. It's going to get handled. Okay, so then you've got the infrastructure package. We're gonna get something very likely between $1.5, probably closer to $2.5 to $3 trillion. My guess. And I expect that all to be done by October 15th. But guess what else I expect to be done by October 15th? I expect inflation numbers to come in, inflecting to the downside, finally. Now, a little bit. It's not going to be like a huge drop, but we're going to see that curve is my expectation. That curve is going to be, in my opinion, well received by the market. I'm hopeful that the jobs data comes in moderately strong. We don't want it to be super weak, although super weak could lead to more tapering, but then you also get a sell-off because then people wonder, is the economy fundamentally weakening too much? I don't really buy the argument that the economy is fundamentally weakening. I think the economy is slapped in the face and anchored it's kind of like this anchor that you're dragging around, and it reaches around and slaps you in the face. And it's like, supply chains, freight. I just want to mess with China, It's stupid. The fears that we have in this market right now, if you think about it, are utterly stupid. So China pulled the rug on property developers and U-turned on the amount of debt that they want companies to have, just like that, because they felt like it, despite the fact that they were encouraging people to take on, companies to take on so much debt to build housing because they needed housing. Now they realize, wow, we have too much housing and too much debt. Well, let's make the greedy corporations pay for our stupid encouragements. These, in my opinion, are not crisis mode scenarios that we face here. I'm not devastated by the outlook that we face. The stagflation arguments that I've seen are absolutely stupid. Almost all the fear-mongering YouTube channels that I see end up spewing. I shouldn't say almost all, because I don't want to make that implication, because I don't watch almost all of them. I rarely watch the other channels. But for example, somebody sent me a video the other day, and they're like, Kevin, this Evergrande crisis. Oh my gosh, BlackRock and Fidelity, they're gonna collapse. They have a quarter of all their assets exposed to Chinese real estate, and oh my gosh, those are like $4 and $9 trillion funds. We're screwed. And I'm like, bro, dog. The person who made the video was referring to an article that referred to a specific bond within these $4 to $9 trillion funds. Those funds themselves are only like $2 to $4 billion assets, which compared to the fund is a fraction of 1/10%. And of that junk bond fund, 25% is exposed to Chinese real estate. Why? Because interest rates are higher there, because it's a risk and it's garbage. There's a reason why junk bonds are called junk bonds. It's because when people invest in high yield stuff and they get burned, the institutional investors or the investors who invest in like quality companies and AAA rated debt are like, yeah, that's why I don't go there. So look, me, I'm happy. I don't love buying a run up, so I haven't bought anything on this run up. I've been buying the dip. I've been saying it day after day after day after day. I'm very, very happy about that. Now, let's go ahead and hop back on over to what the heck is going on a minute-by-minute chart. Right after I mentioned that if you like this presentation so far, make sure to hit that subscribe button. Tell me you like that. That's your best way to tell me. And get yourself up to $70 with public.com by going to metkevin.com/public. Sign up and get yourself up to $70 of free stock. It could be a partial share of Tesla, partial share of Apple. Check it out. metkevin.com/public.